Hey everyone, welcome back. Today, we're diving into the action-packed day we had on November 13, 2024, in the US stock market, plus the forecast for tomorrow. Whether you're day trading or investing long-term, there were some huge moves today and insights into what we might see in the trading session on the 14th. Let's get into it. Let's kick it off with a look at today's market dynamics. Wall Street saw some major shifts, especially with the ongoing adjustments in tech stocks and reactions to recent Fed comments. Starting with the tech sector, it was a bit of a roller coaster. Companies like Apple, Microsoft, and Nvidia came under pressure early in the session. These stocks have been under a microscope lately, with market sentiment leaning cautious about future earnings, especially as we close in on the end of the fourth quarter. Tech didn't fare as well today, with the NASDAQ pulling back about 1.2%. The moves here are definitely worth watching for tomorrow's action. On the flip side, we saw financials come out strong today. The big banks like JP Morgan, Bank of America, and Goldman Sachs picked up gains as investor confidence in financial stability showed through. Higher bond yields have helped financials as well, so if you're looking at those stocks, tomorrow might see more movement in that direction if the momentum holds. Energy stocks were also worth noting. We saw Chevron, ExxonMobil, and smaller energy players ride a wave of gains due to a small spike in crude oil prices. Rising energy demand worldwide and supply concerns pushed up crude oil, which trickled down to oil stocks. While they might pull back slightly tomorrow, the overall trend could be upward if oil prices continue to climb. Inflation is on everyone's radar right now. Consumer prices have been steadying a bit, but the Fed has hinted it may keep rates elevated into the new year. Higher rates generally mean growth stocks, like those in tech, face challenges. Investors, therefore, have been shifting some attention to sectors that tend to perform better with higher rates, like utilities and financials. Utilities saw a bit of mixed action today, with some steadying as they're generally viewed as safer, long-term investments. For tomorrow, keep an eye on this sector as any rate discussion or bond yield fluctuations could influence these stocks. Investors looking for stability might focus here. Real estate has also been interesting to watch. With mortgage rates still high, real estate investment trusts, REITs, have been impacted, showing more subdued growth. Today, REITs like Realty Income and Prologis moved slightly upward, but that momentum could slow if there's more talk about rate hikes tomorrow. The market was also moved by a handful of key earnings reports today. Disney and Walmart were two big names that stood out. Disney's earnings came in strong, surpassing analyst estimates thanks to a rebound in its streaming and theme park businesses. Investors reacted positively, pushing Disney shares up nearly 3%. As of tomorrow, we could see some continued buying if enthusiasm stays strong. Walmart also delivered solid results. As one of the largest retailers, it gave us a look at consumer spending habits. Walmart's earnings report suggested consumers are still willing to spend, especially on essentials. This is an important indicator for the retail sector moving forward, so keep a close watch on Walmart and similar consumer staple stocks tomorrow. On the economic front, today saw a consumer sentiment report that came in better than expected. A positive sentiment generally boosts consumer stocks, and that was the case today, with gains in companies like Target and Costco. For tomorrow, if sentiment holds, we could see continued strength in consumer sectors. International markets have been keeping us on our toes lately, especially with ongoing global trade discussions. The recent tensions between the US and China added some stress to the tech sector today, particularly those involved in semiconductors and chip manufacturing. Stocks like Intel and AMD saw volatility, and if there's any more news overnight, it could directly impact these stocks tomorrow. Another global factor is the rising price of crude oil due to geopolitical instability in some oil-producing regions. This affects energy costs worldwide and has spillover effects on transportation and manufacturing stocks here in the US. Tomorrow, energy and industrial sectors might experience fluctuations if these global pressures continue. Let's shift gears and talk technicals. The S&P 500 closed just above the key 4,400 level today, showing some resilience. This is an important support level, and if it holds tomorrow, we might see buying interest increase. However, if it dips below, we could see a test of the next support around 4,350. For the NASDAQ, we're currently watching the 13,500 level. Tech stocks have been under pressure, so any breach of this support could mean a further slide. Tomorrow, pay attention to how big tech performs early in the session. It'll likely set the tone for the rest of the day. And with the Dow Jones, 35,000 has become a critical resistance point. It tried to break through today but didn't quite make it. If there's enough buying pressure tomorrow, we could finally see a breakthrough, which would likely bring more bulls into the mix. Looking to tomorrow, November 14th, it's shaping up to be another high-energy day, especially with some scheduled economic data releases. We're expecting the latest producer price index numbers, which could give insights into how inflation is affecting producers. If we see lower than expected numbers, markets may rally, but a surprise increase could prompt more selling, especially in growth sectors. We'll also be watching any updates from Fed officials, as rate guidance is top of mind for everyone. Any hints at future hikes will likely impact tech stocks again, while sectors like financials and energy could see gains if rates stay high. In summary, for tomorrow, watch for tech sector volatility, especially in semiconductors. Keep an eye on financial and energy stocks, which have shown resilience. Pay attention to the S&P 500 and NASDAQ support levels as early indicators. If you're trading or investing, stay sharp, and keep an eye on those levels and economic data as we head into the next trading day. Thanks for tuning in, and if you found this rundown helpful, don't forget to like and subscribe for more insights.